Investors brace for a bear market. They buy more gold, sending it to a brand new record all-time high. And they're also buying high dividend stocks while selling out of broad tech. My name is Jessica Amir, a market strategist here with Mumu. It's great to have your company. Happy Monday, this last day of March 31st. So the Nasdaq 100, it's slipped about 5% in about 4 days. It's back to where it was on March 3. Now, this basically tells us that investors have taken all their gains off the table that they made over the past 2 weeks, and they're preparing for more downside, more pain ahead, higher inflation as well. Now, we are seeing a spike in the fear index that we call the VIX, the VIX, which you can track on Mumu. Now, that spiked to a level of 22. That suggests simply that institutions are bracing for a bear market. Meanwhile, in Australia, our market is held up off its lows. It's not doing as bad as the Nasdaq. And there's a lot to be said about that, because in Australia, what is keeping our stocks above water is that gold miners are fueling the charge. So what is happening broadly that we need to consider and what we need to be aware of this week? Well, it's really important. So what happened was Friday's US inflation print was hotter than expected, and that was the last catalyst that really inspired investors to, I guess, brace for a bear market. And it's all ahead of this week's further moves and shakes. Reciprocal tariffs are set to be announced, and China is set to release a suite of data that'll probably cause ripples in markets. And further down under, here in Australia, the Reserve Bank of Australia meets tomorrow. And believe it or not, there's a very, very slim chance with some traders betting the RBA could maybe hike, as in increase interest rates tomorrow. That would spook the market and cause local sentiment to cop a punch on the chin. But I guess the catalyst for gold remains gold is probably going to be set for higher levels. But regardless, keep in mind the Aussie share market. Where is it now? It's down about 2.2% this year. Now, what's clear in this narrative that I've just kind of highlighted is that investors are doing everything and anything to get out of tech stocks. And so this is evidenced by the Nasdaq 100, as we said, falling back to fresh lows on Friday. Investors basically believe now that that 2018 scenario that I was speaking about some time ago, that could repeat again. Remember, in 2018, Trump's first tariff trade wars, the Nasdaq 100 fell 10% twice, and then it recovered, and then it dropped 24% from peak to trough. So the fact that we've got the Nasdaq now down 8% this year is pretty telling. It suggests that investors do believe that 2018 scenario could play out again. We also have to look at what is happening with the US dollar. The US dollar is also lower. Investors don't believe the US dollar is a form of safety anymore, but instead US bonds are doing pretty well. They're up 2%, offering a cushion to those invested in tech. And we're also seeing that investors are continuing to move into the safety of gold. Gold has continued to hit a brand new record all-time high after all-time high, week in and week out. And we're also seeing dividend-paying companies be in vogue, as well as quality companies around the world continuing to push on higher. Now let's touch on gold. So gold, as we said, hit a brand new record all-time high. It's now up 18% this year. It's the best performing commodity globally, and it continues to look like that is probably going to be the case for this year. Now, we've put a gold stock on the screen that we haven't spoken about before. It's called Perseus. This stock is up almost 30% this year, while we just said the gold price is up almost 18%. Now, Perseus maybe should be on your radar for a couple of reasons, not only just because gold moved over $3,121 an ounce for the first time in history, but Perseus has seen a lot of upgrades over the past week, including an upgrade by Macquarie Bank. Also note that dividend stocks are continuing to be in vogue. Here is a high dividend paying ETF. It's listed in the US. It goes by the ticker code of HDV. H for Harry, D for Dalmatian, V for Victory. For those that are tuning in on the podcast, this ETF is up 7% this year. And I spoke about the piece of diversification, that continuing to, I guess come to fruition in investors' portfolios. So the iShares Hong Kong ETF, that's also continuing to do well. It's up 5.5% this year, but I do believe that could see some hiccups based on the data coming out of China this week. The local share market today is poised for further downside to kick off the week. But as I mentioned, I do believe that investors will be taking heed of the messaging that we're seeing on global markets, expecting higher levels for gold prices. So I think positioning this week into gold would perhaps do you well. If you are thinking about positioning your portfolio for 2025, I also continue to advocate for investors getting some exposure to high dividend stocks and also international markets. They're continuing to offer refuge. And I think these are the three key areas that investors will be rewarded in 2025. Thank you so much for your company. For further information on the stocks and ETFs that we've mentioned today, head to the comments section and you'll find hyperlinks straight to Mumu's platform. Happy trading.